Good morning. Weekly update of European stock index funds or ETFs, as well as global stock index stock markets using the business cycle modeling. I'm Rich Positive Critical Point, Wednesday, Jan 21, 9:22 a.m. Eastern Time. Let's begin with France. Weekly chart, and this is actually the CAC futures, or what we call the CAC futures of the France cash index. All right, what we have is enough momentum price change to say that was a level one top. Last week, negative weekly reversals. They become a little concerned what was going to happen over the weekend. Then they got the weekend event here with the Greenland and the geopolitical stuff and tariffs with Trump. And of course, then they sold it down there. All right, so that's a done deal. We got the level one. We knew it was coming rather fast and abrupt to kind of catch if you wanted to do it. And now the thing is, even though it's dropped so quickly here by a sizable amount, it's already in a time frame for France to put a bottom in. The problem is for this coming level one bottom is it doesn't have to bottom to February 23rd. So we could have some rebounds only to see France go lower still later on. This could be problematic and sloppy on us, but there's a chance here that it bottoms this soon, okay? And should rebound eventually into a level two top. So I think sometime now into early Feb, we'll bottom out, put it higher into late Feb on into March, and then we'll have another selling opportunity. But long term, it does look like there's higher prices coming for France this year off of these level one, level two tops. Now, inside of that are level threes, which are monthly buy sell signals, if you will, or just tops and bottoms. I don't actually give alerts and help you with that. We need a faster paced service to do that. But this is a level three bottom there. There's a level three top along with a level two and the level one. And then they're all come crashing down here. But the level three bottom is due now, and quite possibly level two and level one bottoms as well. Now, what it may do is rally in up here next week to fill that gap, and we have the same forecast for U.S. and for other places in the world here. So it can rally up, but then what it's going to do is come down to the next level three. And what we don't know is, can't know yet, can't forecast yet, will it go lower still and put in a later level one bottom? Or will we see that level three pull it back just part of the way, and then it's higher still later because it's already bottomed now, maybe early next week, but likely now. And what would happen is we then would get these level threes with more of an upward bias into that level two versus level three still having some problems, complications, but then higher into level two. And the more time it takes to get started on that rally, the more that rally can be reduced as it runs out of time. It is possible this market has to stall out for a while, and it doesn't have to be as bullish as the rest of the world or the rest of Europe just because of France debt issues and political issues. But overall, it looks like, hey, their economy is still growing anyways, and the stock market really hasn't done all that bad, actually. Hasn't been one of the greater, but it has those possibilities. Now, even though I'm thinking, it can bottom this week, I just don't know for sure. Is it that more important bottom? Is that important buy? I think if you get an up week, you kind of got to gamble on a little bit and do a little buying. Maybe want to do some scale in buying now and lower. But then you look at this weekly indicator, and unfortunately, that was overbought. And this week, it's coming down, widening spread. This is my favorite indicator, and that is a warning of a chance of lingering near-term downside momentum the next 1 to 3 weeks, and this black line is showing us what the model's saying is, yes, it can go down the next 1 to 3 weeks. Now, in addition, this indicator isn't quite to mid-range. It's nowhere near oversold, so that's also a warning. Even though this was a big drop, these prices may not really be all that low, all that cheap. So is it really an emotional overreaction, however? Is this really reflecting some fundamental deterioration? And the way I look at it, I don't think this Greenland event is really going to hurt European countries, okay, even Denmark. I don't think it's going to hurt Europe overall. It's going to be more of an emotional, shaking things up kind of thing. And then when you look at the U.S. economy, I don't think it's going to do anything negative to the U.S. economy. It might be a more subtle long-term headwind in the sense of raising more debt if we actually buy Greenland. So already Wall Street's saying, this drop right now is a little reminiscent of what we had in February to April of last year, but it's a miniature version of it. And we're also kind of getting used to all these craziness on the Trump side and this geopolitical stuff. So I question how much more downside is there, even though it's not oversold. The indicator just now giving a sell signal acting bearish. I think the indicator is a little bit behind here. And this can bottom sooner rather than later. But as of this morning, there's no sign of a bottom. The swing is down. Yet, I don't see where this is destroying the idea that these countries won't be higher looking out in the summer and for this year here as a bull market. It may hold us back how bullish to be, okay? So anyways, that's the best France forecast. We now want to take a look at Germany. Now in Germany, we got the same problem. We got a gap down just like U.S. This is the German DAX, and this is a cash price. Some of these are futures, which is going to have a little bit different price than the cash, but they're strong correlation. They're basically doing the same thing, same signals and patterns and trends. At any rate, German DAX gap down, so someday they're probably going to put it back up. And what we're looking for is, I suppose that could be a level 1, but this doesn't look right in here to me. I'm not too concerned whether that's a level 1 or not. We may have been in there. I'm more thinking this is going higher into a level 2. And I think the stock market may just say Germany's going to do quite well on this Greenland thing no matter what. Even if they got to go to war, somebody's going to be pumping out more money, printing more money, doing more business. And that's, of course, the sad state of affairs of how we actually use business and capitalism and all that fun stuff. Like France, we can allow a few weeks here, 3 more weeks, to find this level 2 bottom. And I think if it trades back above the high of this week, starts filling that gap in there, I think looking forward, a positive week, probably a sign of a level 2, even though if it comes sooner rather than later, it could be a risk of still being too early. But I think it needs to bounce into late Feb, March. And if by chance this was actually a level 1, and we still need to do some work on the fundamental data, the news, some of these technical chart patterns in here, the price behavior, it's possible we can shove this level 2 further out, that it's going to take longer to rally, which would actually be a good thing, okay? And someday there is going to be a level 1 pullback here. But the way I look at it, if this is heading higher in the level 2, or it's already headed higher in the level 2, then that's actually a bit of evidence that future level 1s later this year are going to be higher. And we are long-term bullish, Germany, and most of these markets really, Europe in general, that there's probably still higher coming this year. So we'll probably work through this Greenland thing, even if U.S. does take over Greenland, people are just going to move on, and the markets are going to move higher anyways. If we don't take it over, then I think things will calm down eventually and it'll move higher, but there's still going to be lingering Trump issues. If it's not Greenland, it's going to be Panama, it's going to be something else, and blah, blah, blah. And they really are part of a fascist group that wants to break the world into 3 regions, maybe a bit more, less or something. And that's kind of reminiscent of what happened in the 1940s, World War II. And we threw that idea out. That didn't work. This time around, it may actually work and be around for many decades to come, and doesn't really have to be a negative thing. It would be nicer if we could all get along and saying maybe it is better to find certain types of people, certain types of countries that can be put into certain groups, but they're going to be part of a bigger federation of the world in terms of how to do things. And maybe that it just brings in a different twist of how to deal things demographically that relates to diplomacy, that relates to globalization, that relates to business and culture and society. There's something good we could take out of that idea, but for the way they're trying to do it, I'm a little concerned it's more like what we went through in World War II. Okay, and so, yeah, we should kill it. All right, any rate, there still can be more downside. And like France, this is an overbought indicator turning to bearish this week. It is warning we could have a chance of lingering downside momentum next 1 to 3 weeks, and the model is saying that. But it looks as though it ought to bounce for a level 3 top by next week, should put in a level 3 bottom this week. And so it can bounce up and then go lower still, is what I'm telling you, into the next level 3 bottom as we wait on that level 2. But what I'm also telling you is all these markets, or most of these markets around the world, seem to be setting up that we could put in this level 2, and for some of them more important, level 1 bottoms now, this week, okay? And it's just tricky. We just don't know. Maybe safer just to scale in, nibble at these markets, and then buy on the way up. For 20, 30 some years, I've used this trend following and got so good at it that I just got in the habit of just buy everything at one time on a signal, manage the risk, wheel and deal with the noise and whatever. And it works out, and I make more money than other types of trend followers, timers. Those other types of trend followers, I didn't realize how much they actually just continue to buy on the way up and sell on the way down, and they don't put as much as you would think into that buy signal, nor do they take as much out of that sell signal. And it's really more of a process. And I didn't realize just how much is that done, especially over in the trend following thing. And the way these markets are getting so sloppy and erratic under Trump here, I was trying to think even I have to do that I may be one of the better of geniuses of actually timing these turning points, but it may be smarter to put in small amounts, take small amounts out, this kind of thing, and then build into the position. And that way you're missing out of some of the upside downside, however, but that's maybe the smarter thing to do because even though in a way things have not changed with these markets, we've had this over the past couple hundred years. At the same time, you can just see this. There's some fuzziness and a little bit of sloppiness here, again, due to this whole Trump agenda thing. All right, at any rate, yes, there can be more downside in this, but we've already got some of the better downside targets, and we're already in the time frame to start looking for a bottom, even though we just got this sell signal. So it can be complicated and tough on us here, and we'll just have to go along with the Trump geopolitical stuff. And when in doubt, if you don't know what to do, really you just need to follow the charts, indicators, look at price levels, trend lines, and do the best you can at trend timing and trend following. Anyway, this is Spain now, and this is also the futures of the Spain IBEX 35 index. Pulled back for level 1, you can see it's just not as weak as Germany and France, okay? And it has been the stronger of Europe for years now. It's just amazing. And it's getting so intense, minimum variation trend, very little fluctuation. It just goes up and up and up. The Energizer Bunny, okay? The problem is, that makes it more difficult to actually find these level 1, level 2 tops because they just don't seem to matter. And the level 1, level 2 bottoms relate to maybe just one down week, a half a week, something like that, just a quick stab. And if you don't grab it quickly, you can miss out. It's like they don't matter either, but it does show some evidence there. So we're not sure where we're really at with these more important level 1, level 2 things. All we know is the trend is up, and it's just paid to just be a blind trend followers. Just put blinders on like they put blinders on a horse and say, just don't pay any attention to anybody and all this bad news. Otherwise, you would have messed up on Spain and missed out on making a lot of money. From that trend following perspective, we just have to consider they've pulled it back to the 5-week average. This could be a buy, and they put it up. And it turns out the model is suggesting a level 3, if you want to put some timing into it, that it can bottom this week and be higher next week into the next level 3. And then also it may be going higher into late Feb, March for a level 2. We may yet learn this was a level 1, just as I said in the prior country, and that would stretch that level 2 out further. So there's even more time to go up. All we know is really Spain, they sold a little, they got a little nervous, but it's like they haven't rattled their nerves yet. And the only way we'll know they really got upset is if they put it on down to 17,000 for that index. And do you want to miss out of that much? That is a bit tricky right now. And it is in time, and I'm a little more confident. I'm lacking confidence picking these tops for sell signals, but I'm fine with the bottoms. It can bottom this week for level 1, level 2s. Unfortunately, we have to allow the next 3 weeks, just like the other markets, where something can go wrong. Generally, you would say due to this relative strength, if you had to buy one of these during bad news, bad times, you probably would buy Spain and not the others. You would probably wait to buy the others on the way up as things calm down and you get a little evidence that maybe it's a little safer to do. Now, this weekly indicator, like the others, also acting more bearish here now and going to sell signal, and is suggesting chance for lingering near-term downside momentum next 1 to 3 weeks for Spain, but actually that hasn't always worked that well for setbacks here. So we don't know how much to trust that indicator. All right. All we know is the trend is up. And long-term wise, there's more upside this year in Spain, still fairly confident of that. Next year is what we got to worry about. Europe, world, U.S., there can be a nasty down move, and it doesn't have to be that severe. There's multiple forecasts, and it's just depending what's going on with the news and economy and this and that, of course. But it is looking like 2026 can be an up year after all. It might be a struggle for the U.S., but not necessarily for Europe. So at any rate, let's go on to Portugal, and this is the PSI 20 index, and this is the cash index, and that's a level 2 top, and it's now pulling a level 1 bottom that can bottom this week or the next 4 weeks. Okay, a little bit different. It is overbought, rolling over for a sell signal this week, but not acting all that bearish indicator-wise, but is acting a bit more bearish than Spain on the actual price behavior. It is near its 5-week average, and I don't have level 3s labeled here, but we can have a level 3 bottom. Let me double check this. We can have a level 3 bottom. Boy, ideally, it ought to be this week and no later, okay? If it is down some next week, I'd be a little nervous. It might have problems into the following week. I think in the next few weeks, like with many of these markets, if we can get an up week, it's probably worth taking a chance we've got these bottoms in. With this level 2 higher than level 1, that violates a model rule, triggers another rule, the market ought to be higher still into the next level 1. I have seen markets that will only get back to the level 2 near it, bump its head and down, but ideally, and most of the time, it actually goes higher still. Well, we've already got this upside target, we got this upside target, you might as well even throw that in. There's plenty of upside here for Portugal this year, and this is a pullback, obviously, being concerned over what's going on here with Greenland. All right, let's go to Norway. Norway was like a rocket ship last week. I mean, they could not buy enough stocks, and now it gets hammered a bit, but it's only pulled back a little more than halfway of last week, already starting to come back a little bit here. And I truly believe that was a level 3 top last week. I don't know if I can squeeze that in there and make so you can visually see that. And it can bottom this week or next for level 3, currently favoring this week. And so I think this 5-week average can support this, and Norway is heading higher into those targets. Now, those targets aren't that much higher, at least for the bottom side here in this target, but notice this is a much wider range that does allow a lot higher in Norway. So we're taking these lower, these targets are not so much higher. They're just stair-stepping targets on the way up. So I think Norway is really in a level 2 trend, and it's higher in level 1. So again, model rule violation triggers another rule, be bullish in the next level 1. This is probably going higher in April, May, June. And it could go higher for this year for Norway. We already know they're one of the better run countries, and they're one of the 4 countries that probably, and maybe in the entire world, at least for Europe, that are actually happy with the governments. When's the last time you heard any country being happy with the government and actually happy with their country? And Norway does a better job communicating with their people. They've actually are running a poll thing right now where they have people right off the street in Norway that have been, I think, even hired to work on a project for quite some time of where will Norway go for the next few to several decades. Okay, that's just fascinating structure. And of course, they're one of the biggest sovereign funds invested in stocks, bonds, financial markets around the world, and done a good job there. They've done a good job of making sure profits in their energy industry, some of that goes right to the Norwegian people. Isn't that fascinating? All right. So you look at this trend, that's pretty solid. All right, that's looking as good as Spain, other than it didn't have a lengthy of history of Spain of being that solid. I think there's more upside coming, and I think this is the first week for that level 2 bottom, even though unfortunately something might go wrong in coming weeks. So it's looking like, to me, want to buy something right away, you might want to take a gamble on Spain. and take a gamble on Norway. Maybe there'll be some others here in the next few minutes. But others I can see where, maybe we have to scale and play some games with it. Things can be fuzzy another 2 or 3 weeks, but in general, I think it's up for the year. All right, let's go to Switzerland. Now, Switzerland kind of surprised me. I thought it was going to be kind of a laggard here for the bull market. And it woke up and a little more in line with Norway, okay? And looks like it might be coming in a level 1 top, going into a level 1 bottom now. Even if the level 1 top was earlier, that's even a more bullish setup because it's already started higher into the next top. It just said, oops, I got to come down, put that bottom in, then I can get going again. So a little more weakness here in Switzerland and Norway right the moment, breaking it down a little further here and below the 5-week average. But it is the time now in the next 3 weeks here to look for that bottom. Give me a positive week. It's probably the bottom. And then, of course, take out that high, move higher still. Then we know, hey, the bull market is still intact. And I think Switzerland's going higher this year and better than what I originally expected. But I don't have any targets right at the moment to show you. We can show a little fluctuation where it ought to be right up in this area here in coming months. And then I think it's probably doing like that, but we still have some work to do on that. All right, let's take a look at a fund that you can speculate on, invest in, trade even on a short-term basis. This fund makes you twice as much or lose twice as much. I think it topped latest allowed for level 1s, probably similar to US. It's pulled back here now and can bottom for level 1, whereas US is debatable. So level 1, level 2, and it really doesn't matter at this time. Preference is it's a level 2. So I think that still means rather limited downside here, where I must say going out of a level 1 sell into a level 1 buy can be the biggest down move a year, and that would make me a little nervous. But for US, it doesn't look quite that serious. And I don't think it's going to be that serious here for this index, and that's a gap there that I think someday gets filled. They put it back up. And now it's just a matter, can it bottom this week? Is it going to be a few weeks left? We just don't know, all right? It's going to take some time to work through this, but I think there's still higher for that fund later this year. I don't have any targets to work with. This is another fund that makes you twice as much. One of these funds really doesn't do a lot of business, so you want to check into the volume. Makes you twice as much, lose twice as much. I think it's pretty much the same story, level 1 coming down level 1 and higher later this year. But look how well this one actually held up. It hardly paid any attention to this Greenland thing, and this is European country stocks, okay? Fascinating. I think it's looking strong, but I think it does need, I'm sorry, I wasn't looking at this right. Actually, it's right there at the 5-week average, so it did come down. I was looking at this as for this week. This is this week right there. Little gap there too, but still holding up well. But again, it could have a few weeks where we still got some problems, a little lower around the world, even in the U.S., but it's also that time to start looking for a bottom already, okay? All right, let's take a look at this index here, daily index, and you can see it's beaten up and it's already going lower this morning as I'm talking. I'm thinking that was a level 4 bottom yesterday. That's interweek talk. You'd have to be looking at my U.S. Stuff under the stock Index Magi to understand that. So it probably is going lower than tomorrow. So it does look like all this stuff of looking for these more important bottoms is going to be delayed, at least till tomorrow anyways. All right. Tomorrow, next day for level 4. Level 4 is just intra-week. It's just day-to-day pops and drops, but it is an important thing in terms of incremental buying, selling within larger moves and bull bear markets. And then there is an actual level 4 type of trader who just can't help themselves. They buy today, sell tomorrow, buy today, next day, stuff like that. All right. And then this is another of those Europe indexes. This is the weekly chart, though. And it's pulled back to the 5-week average. It's probably going to go a little bit lower by the looks of it here compared to that other one. And the U.S. can be a little bit lower here. And Trump's probably going to be speaking today or a little later here, or somebody in his place, I forget now, at the Davos World Economic Forum. Maybe that's going to cause some worries here because people are in this mood of sell America, and it's not just because of the Greenland event. They just want to send a message to Trump. There's more to this. All right. Let's swing over to Canada. And on Canada, we have a pullback here this week, obviously, but I'm thinking that's the real level 1 bottom. It's going higher in the level 2. I think at worst, Canada sells off into next week or even some more this week to the 5-week average and then turns up. And this is the TSX Composite Index, Cash Index, Toronto index, I believe, for Canada, looking pretty strong to me, and they've done very, very well since April last year, beating the U.S., and they've been working hard to get all the business they can around the world, and they just made an important agreement with China, and I'm happy for them on that, and I think there's probably more money to go into the Canada stock market, so it's probably going to be bullish this year. All right, let's go to the Euro Stoxx 600 futures this morning, and they're adding a little more down. This is a weekly chart, and a little more downside. It may go down the next few weeks yet, but it's already in the time frame. Start looking for a bottom. Indicator acting bearish, but hasn't left overbought yet. I'm wondering if this bearish indicators aren't suddenly going to make an abrupt turn to a buy signal and show they just didn't work, and this was a snap lower. I just don't know for sure, because going into these bottoms, these are important enough that they normally do reflect some economic issues and people that have paid too much for stocks and money flows, and usually some bad news. Well, we already got the bad news, and it's just how quickly can we turn around to calm down, basically, because really the Greenland thing shouldn't be an end of the world for Europe, global, and U.S. economies and markets. All right, let's move on down to the Euro Stoxx 50 daily, and you can see it already took out yesterday's low, so I'm assuming maybe the U.S. market's a little weaker right now. As I'm talking, I'm assuming it's going lower into tomorrow, next day, and so this level 3 bottom we're shopping for, and the more important shopping bottoms, does look like it's going to be delayed a little bit here, okay? Daily's getting quite oversold, beaten up. It is warning. We do have a right to look at some bottoms here. Now I'm going to swing over to monthly charts of a few other markets, such as Italy. And Italy giving us a negative reversal month, just like the rest. It's just falling in line. The whole world coming down because of Trump, okay? And yes, it doesn't have to bottom to next month, but the interesting thing that does show a chance to bottom this month, right along with the U.S. and some of these European markets. And overall, though, I don't think that's a level 1 top. I think that's the level 1. This is a level 2. That's a rule violation. Suggests by the time we get to level 1, it ought to be higher still. Can't guarantee it, but that's what it looks like. And even though it's on the sell side here in the monthly chart, you can see it was wrong. Wrong for months. It's still a tight bull market, impressive. I think it's a little high priced ahead of itself, frankly. But Italy's really done a lot to really pump up their exports and broaden their exports. I used to say they don't send us the good stuff. Now they're sending us some of the good stuff, okay? But, of course, tariffs also can create some issues. But Trump kind of likes Italy. He's trying to be a little careful there. All right. At any rate, I think it's heading into a long-term top, maybe as soon as this summer for some of these markets, whereas U.S. shouldn't be towards the end of the year, and maybe even into next year. And some of these markets can extend it a little further to be in the U.S. into next year, but basically try to be bullish a little longer than this, frankly, unless something really blows up with Greenland and goes to war and really hurts our economy, all right? And it is a bit slippery in U.S. economic indicators, but it looks like they can still recover a bit here. So I think this is a miniature version of what happened early last year, and is probably a buy the dip a moment around the world, including U.S. All right, let's go to Italy now. I think that wraps up Europe. India, okay. That top, probably level 1, probably coming to level 1 this month or next, and moving higher, and it took out, made a record high there. So that's not a time for a long-term top. It's too late, it's too early, so it ought to continue higher into our targets and the time frame when it might top out as soon as July of this year, but can last into next year, okay? So I think probably this will turn out to be a buy the dip in India. It's just always scary to do these buy the dips on any of these markets when these kind of negative factors strike us. Okay, let's look at China. This one really only backing off for the month. It's not that concerned of what's going on with Greenland, at least not yet, and not that concerned of Europe and some of these other things. And they think their own economy is doing pretty good, and it is. And they are winning. They're doing very, very well on the other side of the things. But inside, domestically, they're trying to figure out how to boost demand. That's been an issue for a few years now, that they need to boost more domestic demand instead of relying on so much of this export business. Nevertheless, this looks pretty good to me, and I think that's a level 1 top, level 1 bottom. This is too soon for level 1 top. I think it's going to be higher into March to April to maybe even May, although it could top out as soon as April, which is fascinating because I think it's the only global market that looks that soon, and that's as soon as for Bitcoin, okay? But I think it's probably going to stay up into summer on into the start of next year, but probably if the U.S. is going higher well into next year, I would think China would actually top out ahead of the U.S. Probably early next year is the latest to top out. So I think there's more upside coming for China. I think they've fixed some things there and things can improve before we get ready for that once a decade sell signal around the world and recessions around the world, which U.S. will probably be the leader and the better timing of that. I can be wrong on that. Some countries can start before, some countries same time as U.S., and some countries after. And we all know, I've heard the old saying of, hey, U.S. catches a cold and the world catches pneumonia. I don't think that's going to be the case in coming years or decades anymore, but U.S. can still cause those issues to go around the world. But the point is now even China and some of the bigger countries can cause those global recessions. It's something to think about, and maybe here as soon as next year, but ideally it's probably around the year 2029, 2030, we're going to get that serious recession, serious decade sell signal, minus 20, minus 60% for all these markets around the world, okay? All right, but at any rate, bullish China right now, and now we want to go to Japan. Now, to Japan, we have to watch out for their rising, exploding interest rates here because of the rising inflation. But also keep in mind their economy is actually growing better than it's done in 20 or 30 years. Okay, and the stock market has done fantastic. It's been on fire. It's a little ahead of itself and problems. Also, there can be a Japan carry trade in the currency markets and connected with the debt markets and interest rates. And we had that in August of 2024 when it was their 1987 U.S. crash. And it was over in a month. They probably did better than us recovering, frankly. To me, maybe that woke up the carry trade. They got to be a little more careful. They had way too much carry trades on there. So if anybody panicked and got caught into some margin calls, it triggered more margin calls, more money had to be put in, and then caused a little bit of a crashing moment even for their stock market, just as it did in us in 1987, which I'm not saying 1987 was exactly like a carry trade. There was some currency issues there, but there were other issues for the U.S. At any rate, I think this is a start. I think this is just a level 2 top, maybe have to come down into next month. Doesn't necessarily have to. And I think it's just going to move higher into a level 1, pull back another level 1. So it's probably not going to top as soon as July, probably going to stay up a little longer than that in Japan. And I think we could use a critical point projection tool to suggest it's probably going to run up to about 57,200s to maybe closer to 60,000 this year, and those targets should always be called or better, meaning it can go higher than that, okay? Next up, we want to look at South Korea, and I think we'll wrap that up for this week. This is South Korea just exploding. I'm so happy for them. They figured out some of their politics, some of their debt issues, some of their how they working with their economy versus government, this and that, and they're just on fire here, and they're not even showing this level put on. They are due for a bit of a setback. They're not even showing they care about Greenland, U.S., Europe. Good for them, okay? Yes, this can be all over and done with by July, but it can stay up into next year along with the U.S. as well. And do keep in mind, U.S. can stop going up by late this year, but probably won't stop going up as soon as July. 2027 does look like a problem year around the world, and it may not be all that big a deal, but I'm thinking 20-25% down for some of these countries, at least the U.S., and then put it right up to record highs again, and then we get the minus 20 to minus 60% down. But what I got to warn you, 2027 could be a short, decade-long business cycle like it was under President George Bush and ahead of the financial crisis and the GFC and the Great Recession, okay? And it wasn't George Bush by himself. Back in the 1800s, there was at least one other occurrence, and I think one or two other occurrences, but debatable, in the 1800s early 1900s, when it was the shortest allowed, and that shortest allowed is always very difficult to time whether it really works. You kind of have to wait till things get really bad before you understand it. But I'm not going to wait. Next year, I will warn you, something worse can happen next year. We could see that 35, 45, 60% down next year and a recession. Then again, we may only see 2025, maybe a little less than 20, a slump in the economy, and then just put it up to record high anyways. But by 2029, 2030, even though I have to allow as late as 31, I'm now thinking the latest is 29, 20, and 2030, that we can have peak economy, peak stock market, and then we get that once a decade sell signal, recession, and a big drop. Okay. All right. I think that wraps us up for this week of what's going on here with these global markets. Fascinating structure. I think there's more money to be made in Europe. They beat the U.S. last year. Canada beat the U.S. last year. Oh, I forgot to look at Mexico. I just added that one in recent weeks here, and it actually had done quite well. Anyways, there is the potential these foreign markets do better than the U.S. even this year. And again, just thank Trump for that, of course. All right, here's Mexico. But it may be time now that maybe the U.S. surprises us here, but I'm thinking Trump's going to keep doing all he can get done before the midterm election, because he's kind of thinking if he looks at the polls today, they're going to lose anyways in the midterm. So he's just thinking, do everything I can get done. And then that way, if it's a duck-lame session afterwards, he can try to wrestle and hang on to things and go from there. Whereas most presidents would be a little careful with their agenda. Now in the midterm, we got somebody who can crash and burn in the China store or closet, whatever, right? All right, at any rate, Mexico, I think we've already seen the level one tops there, and I think we've seen a bottom, and it's already violated, and I think this is heading higher into a level 2 top, back off, and then higher still into a level 1 top. And I think what we want to think about is probably around May, okay, to June, July. I may have to do some math on this, double check with the modeling, because I don't have it on my notes right here, but like that, that's what it looks like for Mexico. And if we do that critical point projection tool, and this would be just chart stuff, but it's amazing how well it can relate to fundamental valuation. I would say this this Mexico fund, I think it is, Mexico Equity, MXE, okay, is ready to run to 13.5 to 14 in Mexico. And so good for them. I mean, they didn't pay much attention to this Greenland, U.S. stuff at all. Good for them. Past results are not necessarily indicative of future results. Have a great week, and send people to criticalpointpod.com. Tell them to get on board. 60-day free trial. Cancel anytime they want. There's a lot of wild, crazy stuff, good and bad, evil, sin, for the rest of this decade. And I think I got a tool to help us navigate that. Thank you.